There's $370 billion available as part of the Inflation Reduction Act. And with over half of Fortune 500 companies aiming for net zero greenhouse gas emissions by 2050 or sooner, this legislation could help them take a huge leap closer to their goals. But while there's funding in the IRA, there's also complexity that comes with the law. Thankfully, policymakers in the US and around the world are listening to industry concerns, and in many cases, addressing them in the new legislation and regulations. Beyond the challenges industries see in the short term, embracing sustainability as a business model offers so many opportunities. And we're not just talking about EVs and clean energy companies. All companies across all sectors can access the IRA's $370 billion of funding. The pace at which companies transition determines the range of benefits available to fund the changes. Tax can and should play a significant role in sustainability strategies, more so than most tax departments are doing today. And that applies equally to the funding and investment opportunities, as well as ESG compliance and reporting. When it comes to funding, grants, and incentives written into law, business leaders are often unaware that they may qualify for this funding. But this is tax's sweet spot, including an awareness of the timing and process for disbursements. Leaders must ensure that tax is involved in their sustainability strategy, having a voice in its planning early and often. Taking all this into consideration, there's 3 things companies should be thinking about right now. First, there are more ESG data reporting requirements than ever, and regulations will only increase. But the good news is, most companies already have the data they need sitting squarely in their tax departments. The advantage lies with companies that can organize, interpret, and understand how to use their ESG data to drive their sustainability strategy. Next, businesses need the right advisors to help formulate the optimal forward-thinking strategy. Tax must be at that table, especially when we consider the critical role tax plays in connecting companies with capital to fund their sustainability goals. And finally, you need a tech-centric approach to your sustainability strategy. Is your technology capable of collecting and standardizing the correct ESG data? Do you have tax platforms that provide meaningful reporting based on business-specific requirements? Now's the time to make sure you have the technology and data platforms in place to help you chart the path for future success.